Hey everyone, I'm Newbie Investor, and this is the second episode of the portfolio series. So, in this video, I'll cover three things: my portfolio, some of the stocks on my watch list, and also the three different brokers that I currently use.
First of all, let's start with the portfolio. I will do a quick walkthrough to give you an idea of what I own right now and kind of set the scene. A more detailed dive into the portfolio will follow after. I'm still not sure whether I'll do it sector by sector or company by company, but it will happen later on. Right now, I have 19 different holdings, as you can see here. The biggest one is an index fund, which tracks global equities. But I also have stocks, I also have gold, platinum, I have some crypto, and I have some global property. As I said before, I currently have 19 different holdings, and I usually try to keep them below 20, 25, and the reason behind that is that the less holdings you have, the easier it is for you to track them. The better you're able to learn about them, the more familiar you can get with them, which in turn reduces the risk that you will make a bad investment decision. It also improves the edge that you have over other investors. It means that you're more likely to identify a good investment opportunity before the rest of the market. Also, my portfolio is quite small, which is probably the case for most retail investors. One legendary Wall Street hedge fund manager named Peter Lynch, in his book One Up on Wall Street, he said that you don't really need more than 10 stocks in a small portfolio to outperform the majority of hedge funds out there. So no pressure, you just need to pick the right stocks and you'll be fine. A concept that I've been looking into recently has been the one of winners and losers. In your portfolio, you most likely have companies that you are very optimistic about, and those would be the winners. The winners are the ones that you believe are going to be successful over the long term, whereas the losers are the ones that are kind of okay, but they may underperform or they may not be the ones that you really want to invest in if they don't fit in with your investment strategy, for example. So something that you can deal with winners and losers in times of bear markets or general market correction, or if the market is going in an opposite way of what you were thinking, what you can do is usually you can sell out the losers and buy more of the winners. For the time being, my winners are currently, well, my biggest holdings to be fair. So Baidu, Alibaba, Dropbox, those are three companies that I'm really interested in. I believe that they will have really good prospects over the long term. Baidu has recently taken a hit due to a hedge fund going rogue, really. And that was actually a very good opportunity for me to improve my position in Baidu. So that when that actually happened, I kind of bought more into Baidu. I actually got a really good deal out of it. Alibaba is another stock that I really like. The company has two primary businesses. The main one is the online retail one. So they have various different online websites that cater to different types of customers and consumers. They sell to businesses. The company is essentially the biggest online retailer in China. And the second business is cloud computing. So Alibaba Cloud is the largest public provider of cloud services in China, and it's also growing super fast. So they also have some entertainment and some other media interests and so on and so forth, but they're quite small parts of the business. Dropbox is another good company. They offer cloud storage, personal cloud solutions, and slowly they're moving towards becoming more of a collaboration platform. So for example, if you're a small business, if you're a freelancer or something like that, Dropbox offers services that can address your needs. And that's kind of really the target market that they're going into, which is actually quite interesting because right now, and the last few years, there has been a big surge in the gig economy, so to say. And this is actually becoming kind of a new way to work, really, with all the working from home and so on. So this could prove a really interesting opportunity for Dropbox. Canadian Solar is basically a pure play solar company. Although they originally started as just solar panel manufacturers, right now they've kind of moved into pretty much addressing all the different solar markets. So they address the residential market, the commercial markets, they produce panels, they also produce the different technology that you would use with solar panels. So inverters, I believe that they have just started to produce batteries as well. And they also develop and sell these projects. So their Canadian Solar is one of the best solar companies for me right now out there on the market, which is why they're one of my top holdings. EFT, which is Euronet Worldwide, another very interesting company, although it is likely to not fare too well right now, simply because its business model relies on travelers, really. Their most lucrative business section is ATMs, which generate the most revenue whenever there is currency exchange involved. So I believe that they operate mainly in Europe. Currently, with the lockdown and all the travel restrictions, there's not that many users or customers that withdraw money from abroad, which means that Euronet don't really get as much revenue out of it, which is not great, but at the same time, the company has managed to stay afloat. They're still generating money. They've also got a couple of other business sections which are quite interesting. One is e-payments, and the other one is money transfer. And both of these have seen a reasonable rise over the last year, which is quite good to see. Qfin, or 360 Finance, is a Chinese company which is dealing with credit services. Their main product, I believe, is small loans or loans in general to small and medium enterprises. They also have various different products, but I believe this is the main one, the biggest one. And it's a field that is growing quite rapidly in China right now and really all over the world. Even though there has been some regulation crackdown on the side of the Chinese government, Qfin are actually doing quite well because their business model means that they're involved in services that have not really been affected by this change in financial regulations. And in fact, it has affected their competitors. So it actually has boosted Qfin. Then moving down, we've got Citigroup, which is one of the biggest banks in the world. It's simply undervalued, I believe, at this point, so I've bought it. Ameriprise is the next one on the list, which is a massive asset management company for institutions and so on. I believe that they also offer wealth management services and pensions, and I believe a small insurance business, but the main one is the asset management. PPLT, that's the Aberdeen Platinum Fund. I'm just like to hold platinum because, again, as I mentioned in my previous video, there is a growing worry that there will be lots of inflation in the coming year or two, maybe, or even more actually. Moving down the list, we've got First Solar, again, another solar company, although this one focuses primarily in the US, which is why I bought it. Obviously, Joe Biden has a very big, massive, really, infrastructure plan, which heavily includes renewables. First Solar being positioned in the US, really, I believe that they'll benefit quite a lot from it. Next one on the list is the iShares Global Property Equity. So this is a ETF which pretty much buys, I believe, rates. So it is essentially a way for you to kind of get involved in rates. Fidelity National Financials are primarily a title insurer, which basically insures both the seller and the buyer during the home buying process. And if there is an issue such as the Real Estate Act or whatever is invalid, or there are some claims to the land that haven't been seen before, but they have suddenly popped up, title insurance would deal with the legal fees and stuff like that. So essentially, it's kind of just a way to ensure that you're not going to get some unexpected expenses when you're buying a house. So GLDM is the Gold Mini Shares Fund, which essentially tracks the price of gold, which I believe will most likely rise up, or at least it will be a stable asset throughout the next couple of years. Generally, gold is good to own. It's not the most flashiest of, ironically, but it is stable, and in times of inflation, it could offer a good return. The next one down the list is Jinko Solar Holding. This is another solar company, and they are actually one of the biggest solar manufacturers and sellers in the world. They currently have some of the best solar panels on the market, which is why I've decided to buy them. They also seem to be undervalued. The next one down the list is CryptoEqual. CryptoEqual is a portfolio in eToro which invests in 14 different cryptocurrencies, and the allocation there is equal between all 14. So I believe that every cryptocurrency is worth about 7.11% of the portfolio. Okay, so this is the CryptoEqual portfolio. So as we can see, it's done quite well this year. It's up almost 400%, which means that if at the start of the year you had put 10,000 in, now you would have $48,753. Now, if you look at the actual asset allocation, we can see that, as I mentioned before, the portfolio allocation is roughly 7.11% for every single cryptocurrency. Obviously, currently their value is different because of the fact that they have appreciated since the portfolio has started. So the portfolio was started on the 7th of January. So if you click on one of these, we can see that here. And since then, we can see that Miyota has gone up around 410%, which is massive. You would have gained $4.10 for every dollar that you have put in that cryptocurrency since the portfolio started copying it. Now, if we go back to the portfolio, the last 3 companies on here, Borg Warner, which is a auto parts manufacturer, and they work quite close with, I believe, Ford and Volkswagen. They are currently shifting towards a more electric vehicle approach. So they are currently focusing more on electric vehicles, electric vehicle parts, electric drivetrains, and battery solutions, and so on and so forth. The next company on the list, Dana Incorporated, is pretty much the same as Borg Warner, but it has slightly different customers. And again, it's an auto parts manufacturer. It's leaning more towards electric vehicles. They have a very good electric drivetrain solution, and they are currently very undervalued, in my opinion. Finally, we have Overstock. Overstock's primary business is online retail, and their main product is furniture and other household items. But the company has a bit of a twist to it, so they have a subsidiary called Medici Investments, which invests in different crypto-related companies, blockchain solutions, and so on and so forth. And currently, that's not really a productive part of their business, but it's an interesting one. During this whole hype around the cryptocurrencies, this has been valued quite highly. So this is currently all of the holdings that I have in my portfolio. However, I'm always trying to find out good new investment opportunities. While the stocks on my hot list have a really good business model, I think most of them are right now overvalued. So I'm just keeping an eye on them until they drop down to a more reasonable price. So the first 2 on my list are Amazon and Facebook. Both really good companies, but both are, I think, overvalued at the time. Next we have 2 solar companies, SolarEdge and Enphase. They're both really good. SolarEdge recently lost its contract with Tesla to make its batteries. So I'm just waiting for their next quarterly earnings to see if that will have a major impact on their business and whether the management will issue any new or revised guidance. Enphase, again, really good company, but it's just really overvalued at this point. It's trying to tap into the Indian solar off-grid market, which is huge. If they manage to do that successfully, I think they will be a very, very, very valuable company. Next 2, we've got Palo Alto Networks and CrowdStrike Holdings. Both of these are cybersecurity companies, and both of these are trying to focus on more cloud-friendly solutions, which is a big trend right now in cybersecurity. The next couple is Volkswagen and NIO. Both are car manufacturers. Volkswagen is not primarily an electric vehicle, whereas NIO is entirely an electric vehicle, but they both have good business models. Volkswagen is the more established one, but it has had a really good run so far. So I'm just waiting to see what's going to happen to the price. Then I've got Corsair Gaming, which just have really good fundamentals. They're tapping into the computer accessories and gaming hardware business. So you can pretty much buy anything gaming related from them, which is quite cool. Then we have Night Swift Transportation, which is essentially a trucking company. It's got a really good business model and it's got a really good fundamental basis of the business, which is why I'm keeping an eye on it. I was recently into it for roughly 10-15% profit, but I think that the price has now hit a bit of a plateau, so I'm waiting to see what's going to happen to it. And finally, I have some rates on my watch list. Some of them are AGNC and Realty Income. I need to do some more research on them though before I can commit to any one of them. For the end of the video, I'll show you the 3 different platforms that I currently use. And just to let you know, I haven't been sponsored to promote any of these. My main one is eToro. You can pretty much use it for most stocks, ETFs, cryptos. You can do CFD trading, leverage, and overall it's a decent one, so there's no commissions on there, but it can be a bit unreliable. Over the last few months there's been a few outages. The platform crashed, or orders weren't being filled, or they were being filled with a 5-10 minutes delay, and sometimes that resulted in an issue, and I got 1 refund for 2 cents, for example. The best feature of eToro though is the social aspect of it. If an investor has set their profile to public, like I have for example, you can just go in there and you can kind of see their portfolio, you can see their history, you can see their stats since they've started trading. It's actually quite nice because you can see other people, you can see their trading strategies and you can actually see how they've done. And if you want to, you can also copy traders. I used to do that before and I actually had really good results out of it, but as I said in my previous video, I'm trying to become a bit more active. If you're interested in my profile, I'll put the link below so you can take a look and see how I've done before. Although bear in mind that my performance hasn't been excellent over the last 3 months. Then my second one is Revolut. It is technically an online bank, but it also does have a stock platform, which is very basic and you can only access it on your phone. However, there are three main reasons why I use it. First of all, it's got some stocks that eToro doesn't have. So for example, Jinko Solar Holding, that's not on eToro, but it is on Revolut. Secondly, Revolut is super reliable. When other online platforms were experiencing outages or they were stopping trading and stuff like that, Revolut allowed trading and there was absolutely no issues with it. And finally, Revolut is really good in terms of dividends. So I live in the UK, and if I trade stocks on eToro and I buy a stock that pays out dividends, eToro double taxes your dividends. So every $1 that I would receive from dividends, I get taxed 30 cents. Whereas on Revolut, that doesn't happen. On Revolut, I only get taxed 15 cents. The only issue that I have with Revolut is that it has commissions. So for every trade, you need to pay £1 of commission, which is not that bad to be fair, but you know, every commission that you pay is that little bit of profit that gets taken away from you. If I was trading smaller amounts, that £1 would actually be quite a big commission. Although having said that, most brokers' commissions are somewhere around £5 or £6, so actually £1 isn't that bad. My third and final platform is Moneybox. So Moneybox is not like Revolut or eToro. Essentially, Moneybox is just a saving app. You cannot really actively trade on it. What you do is you pay weekly installments, or you can do one-off deposits in it. And essentially, you simply choose whether your funds are going to be allocated to stocks, bonds, cash, or real estate. Personally, I just use Moneybox for all of my ETF investments. The two ETFs that I showed earlier, the global equity shares and the global property ETF, they're both through Moneybox. If I wanted to invest in bonds or a cash ETF, I would also probably choose Moneybox simply because fees on there are very low. However, on the bright side, you can use your ISA on Moneybox. So if you live in the UK, that's your individual savings account. So if you open a stocks and shares ISA, you can use Moneybox for it, which is good because all of the profits that you make on those stocks are tax-free. And obviously, if you continue to save and invest in Moneybox, then over time you'll be able to amass quite a big pot without having to pay actually any taxes whatsoever. Finally, a quick update. Following some feedback, I've worked on improving the audio, so hopefully the sound will now be nice and crisp. I will also try to make the videos a little bit shorter, but more focused. Let me know in the comments below what you prefer. As always, thanks for watching, and I will see you in the next video where I'll talk about diversification and how I diversify my portfolio.